Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during February 2011. I'm Suchit Gupta, a member of S&P's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in March and early April 2011. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the almost 5,000 contacts in LCD's leveraged loan group on LinkedIn. The links to follow LCD are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Before getting down to business, some fine print. This disclaimer, courtesy parent company Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. In February, the market tilted back to being issuer-friendly as new issue loan volume failed to stay on pace with cash inflows. Leveraged loan issuance for February 2011 stood at €3 billion, while high-yield bond issuance stood at €2.1 billion. In the secondary market, loans finished the month at 99.52, while high-yield bonds closed the month at 105.03. The S&P European Leveraged Loan Index, the LE, had a positive return of 1.28% ex-currency for the month of February 2011. Investors still have cash coming in through repayments, which they have to deploy and are not able to deploy it quickly enough. Spreads are coming under pressure in the loan market, at least on the new issue front for now, as issuers take advantage of excess liquidity to push through reverse flexes on spreads and structure. Default rates remain at their two-year lows. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 14 largest, most liquid loans consisting of 10 issuers since 2002. The secondary loan market was up a point for the month to close at 99.52. The flow names are now closer to par than at any date since July 26, 2007, almost a full year before Lehman went under. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market rose 75 bips to close the month at 105.03. This next chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. The European loan market posted a gain of 1.28% for February 2011. Year-to-date returns stand at 3.98%, compared to 2.11% for the same period last year. Now from the secondary, we turn to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issuance for leveraged loans stood at $3 billion during the month, while high-yield bond issuance stood at $2.1 billion for February 2011. Default rates continue their slide downwards. Default rate by principal amount stands at 2.3% at the end of February. The default rate by issuer counts now stands at 3.96% at the end of February from 4.42% at the end of December. In summary, institutional investors are flush with cash. LCD's estimate of repayments on a rolling 3-month basis stood at over €5 billion. CLOs are especially keen to deploy this cash. This excess liquidity is causing a downward pressure on spreads. We've seen a few reverse flexes in the primary, i.e. Mivisa, IMCD, and IDH. And then for those tranches that are part of a larger cross-border transaction, we've seen a repricing, i.e. Reynolds, PVH, and Burger King. Further continuation of bond for loan takeouts, amend to extend, as well as IPOs, as companies continue to address their maturity concerns. Sponsor-to-sponsor transactions continue, but these transactions really don't add new money to the market, as the existing syndicate just typically rolls over. The lack of real brand new M&A activity, not just recycling of existing deals, is causing the market to swing back to being more issuer-friendly. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups for February and March. The link to the page is in the description for this video. For For more information on LCD's news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.